Joining us, Micheal Saylor, MicroStrategy Executive Chairman. You never stop adding to the position of your company, and you have a lot of courage because there's been a lot of major swings in the past. And there were times when I was worried. Can you tell me, were you ever close to margin calls? Anything ever happening to MicroStrategy?
Well, when Silvergate Bank failed, we had to redeem that, but it turned out to be a benefit for us. We made a lot of money on that redemption. We repaid our Silvergate loan. But it's been a great journey. Since August 10th of 2020, MicroStrategy's bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P's up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Does MicroStrategy now do anything else?
We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity, and they trade the options. And so we have a very big, deep, rich options market. We've got high performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral.
Has anything changed in terms of, you think, the investor class that's investing in your stock versus now investing, for example, in an ETF? Obviously, one is more levered than the other.
Yeah, if you're investing in the ETF, you're getting one-for-one performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax-deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent, buy Bitcoin with it, hold it for 7 years, you can't do that as an individual, but MicroStrategy can do it.
What have you made? Right now, I think I just saw a headline that $1.2 billion in outflows took place out of the Bitcoin ETF. And I'm curious, sir, what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing, and it's created more demand. But you got to keep in mind that Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10 to 1, and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs.
Can you explain
this? That's okay.
Can you explain this? So, you know, one of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
It's supposed to be the opposite?
Over the long term, it's up 44% a year, every year. And you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.
Is it a non-correlated asset people can count on, or is it just a risk-on?
You know, in the near term, whoever's got the most money can decide whether it correlates or non-correlates. It's like, again, I can lever it up 20 to 1 on Saturday night, and I can trade it long or short.
Hey, Michael, just the whole idea of leverage in something that is admittedly so volatile causes some people some real concern. I mean, I'm far more conservative. I would be worried about that. What's the worst case scenario of something that would happen in a leverage situation like that with the Bitcoin ETF?
I think what happens is people offshore trading on Binance with 20-to-1 leverage get wiped out on Saturday night when there's a potential missile scare. And so they're the degenerate crypto traders. On the other hand, what you want is a free, open capital market. Everybody can trade it any way they want. And so if you're going to hold it for more than 4 years, you're going to get superior performance with that volatility.
Gensler, with all we've seen, and I wonder what you think. Do you have anecdotal evidence exactly what he's thinking in terms of Bitcoin regulation? Given that do you think he's done the 100 hours that you said need to be done to understand it? And if so, what do you attribute I don't know, he's been unable to stop it because of the courts, really, but he certainly tried. What do you attribute that to?
You know, I think this administration's been fairly conservative in their embrace of the crypto economy.
Right.
They want to go slow, carefully, deliberately.
But do they want to go or do they not want to go?
Well, before Gensler entered office, the rhetoric was even more controversial. After Gensler entered office, you heard Jerome Powell, Christine Lagarde, Gary Gensler all say Bitcoin is a speculative digital asset. And that was actually a move forward. With the approval of the ETFs, it was the second move forward. I think clearly we're all waiting for big banks, bulge bracket banks, to start to custody and hold Bitcoin. That'll be the third big shoe to drop.
Do you think that the election matters, and do you believe that Donald Trump is more Bitcoin friendly than like a Biden and Harris?
Well, there's no doubt the Republicans have taken a very pro-crypto stance.
Republicans or Trump?
Well, Trump.
And you believe him? You don't believe he's
in
just
particular.
Yeah.
There's a tension between the 21st century and the 20th century. In the 20th century, company comes public. It cost $100 million in 4 years to go public. I know I did it in '98. In the 21st century, I can create a public crypto token in 4 hours for $100. So you have 100 million companies that want to be publicly trading an asset 1 million times cheaper, faster. That's the crypto economy. The traditional economy is you take 4 years, you spend $20 million a year on compliance. And I think that the two sides are talking past each other. But clearly, the future is faster, smarter, stronger.
I mean, you know what Senator Elizabeth Warren thinks about Bitcoin. I mean, if she becomes I've seen her, big jobs.
The political winds have shifted, and I would say that, at this point, the Republicans have shifted to way progressive, and the Democrats are drifting to the middle.
In terms of Bitcoin?
In terms of their view toward crypto and Bitcoin.
And let's say that it is a continuation of the Biden-Harris administration. Does Gensler take on a larger role? It becomes even more difficult?
That's all above my pay grade. What I would say is, my view is...
To be Treasury Secretary? I mean...
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
For anyone, buy it and hold it for more than 4 years. And then you think eventually it takes how much, let's say it is digital gold, what percentage of gold's market cap does it finally?
Bitcoin's 0.1% of the capital in the world right now. I think it's going to go to 7% of the capital.
7%?
My long-term forecast is it's going to go to 13 million over 21 years.
13 million.
13 million, but what is it 5 years from now? In your 4-year calculus.
It's been growing 44% a year with about a 40 to 50 vol. I would think it'll move on at 40%, then click down to 35, then 30, then 25. And at some point, it'll be the S&P return plus 8%, and it'll be the S&P vol plus 8%, because it's always going to be a more global, open, free capital market.
How is there stuff that's above your pay grade? You're worth billions. I mean, we can say that. That is above our pay grade, but who gets to decide if it's above your pay grade?
He might have been, it's below his pay grade.
Right, exactly, exactly.
Bitcoin's an expression in this view that you want to invest in an asset without counterparty risk, which means you don't want to be counterparty to a country, a currency, a city, a company, a commodity, or a culture, right? So people think it's a risky thing. It's all about people wanting to not take risk. They don't want to guess whether Picasso's or real estate in New York or NVIDIA stock will be higher in 10 years. They want to buy money. They want to buy 1/21 millionth of all the money in the world forever.
End it there, Michael. Thank you.
Great. Michael, thank you.